Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 25th of November, Wednesday. So as usual, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold extending losses again by 1.65%. The pair of Euro-US dollar rose by 0.43%, the dollar index fell by 0.34%, and oil surging by 4.56%. So let's get into details with our headlines of today. One, something to discuss about would be the oil market and its extended gains on Tuesday, back above the $45 per barrel handles. Now this level represents its highest level since the bloodbath in March, amid the COVID-19 initial outbreak. Now, market sentiment improved following the promising vaccine news for the past few weeks, and this had boosted optimism for a strong and healthy economic recovery ahead. And when the economy recovery is healthy, that means the same thing would happen for the oil demand. So as the market slowly returned to its pre-pandemic conditions, oil traders are currently waiting for the resumption of the airline sector's operations. Now this is because the airline sector is one of the major oil consumption sectors and it contributes a lot to the global oil demand. Furthermore, investors ahead can focus on today's crude oil inventories report to gauge the short-term outlook for the oil price. So instruments involved here would be crude oil itself and also the Canadian dollar, where Canada's economy depends highly on the prices of crude oil. Moving on, next we have the dollar index, where we can see the current risk-on mode had drove investors away from the dollar index. Now as the market continues to cheer on the upbeat vaccine news, investors are slowly shifting their portfolios from the safe haven markets into riskier assets. Now since the start of the week, major currencies are gaining against the dollar, such as the euro, the pound, the Australian dollar, the New Zealand dollar. And in terms of commodity, traders are currently selling the gold and buying the crude oil. So we can see the correlation here, where gold has been falling for the past few days and oil has been increasing to back to its pre-pandemic levels as we speak. So the market is slowly moving back to the previous levels in March in anticipation of the vaccine's release. Now, however, as the market sentiment is now depending a lot on the release of the vaccine, so overall market could overturn if the vaccine stumbled upon barriers or are rejected by regulators. So instruments involved here would be dollar index itself, and also other safe havens such as the gold, the yen, and major currency pairing against the dollar. So that's all for the fundamentals. Moving on, let's take a look at the news release we have for today. So please take note, times stated here are at GMT plus 8. So today's data mostly will be from the United States. So the first data would be the core durable goods orders, forecasted to fall lower from previous month of 0.8 to 0.5%. And furthermore, there's also the gross domestic product, where it is expected to improve slightly from previous quarter of 33.1% to 33.2%. Whereas for the unemployment claims, is expected to fall lower from previous month of 742,000 to 730,000. My mistake, unemployment claims is a weekly data, so it is expected to fall from previous week of 742,000. And these three data will be released at 9:30 p.m. So for the core durable goods and the gross domestic product, if it were to provide a higher reading than the forecasted value, that would further improve market sentiment, where the world's largest economy is currently picking up. Whereas for the unemployment claims, if the reading is higher than the forecasted value, that would indicate that overall unemployment in the US is still not going good and people are still claiming for the first time unemployed insurance. And finally at 11:30 would be the crude oil inventories report from the Energy Information Administration, or the EIA. So overall crude oil inventories are expected to fall from is expected to build up since last week by 127,000 barrels. So for the crude oil inventories, if it provides a higher reading than the forecasted value, that would indicate an increase in overall inventories, also a slowdown in the demand, and that would actually provide pressure for the oil prices. So that's all for the news release. Moving on, let's take a look at the technicals. So here's an overview of instruments to be covered. First off, the pair of Australian dollar, New Zealand dollar in the H4 chart still in a downtrend. For the pair of Euro US dollar, H4 showing an uptrend. Canadian dollar against the Swiss franc in H4 showing an uptrend. And for oil in the H4 chart, an uptrend as well. So let's get into details with the chart analysis, starting with the Australian dollar against the New Zealand dollar. So overall, in terms of the daily chart, we can see that overall the pair has been falling. However, yesterday's trading and the candle had led a long shadow below and closing overall with a hammer formation. So constructing the Fibonacci from the highest point here towards the lowest point. And in terms of the MACD in the daily chart, we can see also a positive divergence where momentum building up, however prices extending lower. Moving back to the H4 chart, there is also a positive divergence signal where we can see momentum building up overall and the prices overall have been falling. So we can expect either a major change in trend for the pair or a strong technical correction ahead. So overall, investors are advised to consider long positions, and this could be a long-term positions at the current level at 1.05, near to 0.555. So stop loss should be placed below the 0.0 Fibonacci, which is almost up to 100 pips, and a take profit can be targeted closely first at the 23.6. And a higher target would be the 38.2 Fibonacci near 1.0690. Next, for the pair of Euro US dollar in the H4 chart. Now we'll first look into the daily chart to obtain the first resistance. So we have one at the 1.1890, and a second resistance would be the highest point here, close to 1.1950. And looking back into the H4, we can see that the pair overall has successfully broken above the resistance at 1.18, so signaling a possible continuous uptrend in the near term. So overall, investors can consider long positions at the current level 1.1900. Stop loss should be placed 40 pips at 1.1860, and the take profit first targeted at 1.1950, and the longer term targeted profit, we will need to look back towards the previous resistance, most probably towards the psychological level at 1.200. So overall, as we speak in terms of fundamental and technical, it is all proving that risky assets are gaining momentum, bullish momentum. So in the long term, cautious investors can still consider long positions for each technical correction. So constructing a trend line from here to here, connecting to, prices might fall back towards the trend line, and investors can consider entering into long positions at the lower levels. Next, for the pair of Canadian dollar, Swiss franc in the H4 chart. So overall, the pair continues to be traded within an uptrend, where we have seen previously it has played around, and previously it has also broken above the resistance, the previous resistance at 0.700. So next resistance would be at 0.7040, and looking into the daily chart, we're looking for a further resistance would be the support over here at 0.7080. Moving back, so overall the breakout above suggests further upward momentum, or the pair might face some technical correction back towards the trend line before continuing moving upwards. However, MACD still supporting a strong bullish momentum, so investors can consider entering into long positions at the current level near 0.7010. Stop loss should be placed safely below the trend line, most likely at 0.6970, or to be even safe at 0.6960, which is also a support zone over here. And take profit first targeted at the first resistance 0.7040, and a second targeted profit at the 0.7080 resistance. Lastly, for crude oil, now previously we have covered a 45 resistance, and also the previous breakout was at 43.5. So moving into the daily chart, seeking for the next resistance would be somewhere around the psychological level of 48. And as we speak, in terms of fundamental, the vaccine news continues to provide a strong support for the oil and also the demand. So we can expect strong demand continuously for the next few weeks. However, do take note that since the prices of crude oil is now depending a lot on the fundamentals, so any shift in the fundamental sentiment could send crude oil back towards its low levels, breaking both all and falling most likely back towards the strong support at 41.5. So cautious investors here are advised to wait for the breakout above 45 before entering into long positions, long-term long positions. And next resistance targeted at 48 would be a 300 pips movement. So investors with a stop loss should be placed around 150 to 200 pips, most likely at 43.5 or 43, and a take profit targeted at the 48 levels. Aggressive investors, however, can consider short positions, anticipating a short technical correction back towards the support zone. So aggressive investors are advised to consider short positions if oil fails to break above the 45 resistance, with a stop loss and take profit around 50 and 100 pips. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.